Fiscal policy involves the decisions that a government makes regarding collection of revenue through taxation and about spending that revenue. It is often contrasted with monetary policy, in which a central bank, like the Federal Reserve in the United States, sets interest rates and determines the level of money supply. Fiscal policy and monetary policy can have dramatic effects on the economy. Let's discuss those effects in more detail. Government spending. The idea is that government spending helps offset the drop in private sector spending by consumers and businesses to stimulate growth. If the government is buying, then businesses can sell and employees can work, which increases the money available for both business and consumer spending. Eventually, the private sector spending will pick up and government spending can decline. The greatest example of this approach is the Great Depression era New Deal. Taxation.
The basic thrust is that if you lower taxes on businesses and individuals, the individuals will be able to spend more, the businesses will be able to invest more, and the economy as a whole will grow. It's a simple and politically powerful idea and has set the terms of the debate for a generation.
One of the most important targets in fiscal policy is stimulating domestic consumption. The success of this target directly helps enterprises deal with the biggest problem in their business, which is the decrease of consumption demand in both national and international market. The government decided to reduce 50% VAT for 19 products and free tax for personal income in the first 5 months in 2009. The total budget to be exempted until the end of July 2009 about $14,700 billion. About $20,000 billion a year, 71%, while corporate income tax reduction of about $9,900 billion, value-added tax reduction of about $4,470 billion copper, personal income tax exemption of about $4,507 billion. Beside, government issues a lot of solutions for reducing or free tax, and this helps firms get out of bad situation. Enterprises are reduced and returned 90% VAT by government. In detail, the government also decreased by 30% income tax and extended more time, 9 months, to pay tax for middle and small business in 2009. Moreover, government restarts several investment construction projects in 2008 and runs some projects such as house for lower-income people, dormitory for students, and essential constructions. Total capital of state budget which are borrowed from making plan in 2009 no need to pay back for government, account for 3,400 billion VND, 100%, in October 2009. Other capital for supporting different kind of project account to 15,492 billion VND in these project from February to June in 2009, 12,627 billion VND for urgent and important projects, about 47%. And the total capital for improving canals, offsetting the difference in interest rates, supporting business maintain employees, is approximately 37,100 billion VND 99.7%. In terms of macroeconomic aspects, this is the stimulus package in the short term, effective economic liberation rid of debt. However, considering the long term, this stimulus package increases the risk of high inflation 2007-2008 stage affect sustainable development as well as the process of restructuring the economy. Consequently, during operations should use extreme caution in order to avoid the long-term consequences for the economy. The second is monetary policy. Vietnamese government has implemented expansionary monetary policy by several solutions. In these solutions, the most highlight and efficient point is policy of 4% offset short-term bank loans. The deadline is 8 months for the loan, which was signed and disbursed from January 2, 2009 to December 31, 2009. Maturity date of interest rate, the banks deduct 4% and then the central bank will refund this to the banks. The objective of this policy is to help the manufacturing business reduce unit product cost and maintain activities. It can say that the most powerful impact of the economic stimulus package focuses on supporting 4% interest rate. In fact, however, its function is to rescue not to stimulate the demand. Almost businesses have been delivered from the circulating congestion of capital burden because of bad debt. Thereby, it activates the economy and helps businesses and banks get rid of debt point. Besides, government did the reduction of the basic interest rate, discount rate. Therefore, ceiling IO reached 10.5%/year, reduce 50% comparing with 6 months before. Bank supply IR deal for demand consumer loans. Banks also have mechanism for credit guarantee. Firms have guaranteed that they have maximum capital 20 billion VND, using maximum 500 labors. Up to September 24, 2009, Credit Capital has disbursed 405,000 billions VND, 95%, following decided 131 January 23, 2009 of government credit following decided 443, short-term loan, long-term, 497 supporting IR for agriculture, above 34,000 billions VND. Total amount of supporting IR transferred to credit institutions is about 10,000 billions VND up to 2009 59%.